Mr. Avinash Gorakshakar, Director of Research at Profitmart Securities, joining us here on News 9. Thank you for joining us on News 9, sir. Always a pleasure speaking to you. Now, the markets have been rather choppy this week, and volatility has seen a sharp spike. India VIX went up as high as 16. We have receded from those levels. But in a market like this, where we are seeing Nifty moving over 0.5% on either side, what would be your advice to retail investors? What should they do during such times?
Yeah, good morning, Suyash. My sense is, see, I think this market is pretty volatile, and I think you need to take positions, when there is a meaningful, reasonably good correction. I think markets have not given that kind of correction, and I think markets are now excited that quarter 3 numbers which are going to come out, starting, next week onwards, are likely to be slightly better than what the street is expecting. In fact, the first set of numbers is going to come from the IT name. So if there is any positive commentary from either a Infosys or a TCS, I think you could see if the first action coming from the IT sector. And
Hmm.
as far as the buying strategy is concerned, I think we still believe that the auto pack, the auto component pack, the capital goods sector, the real estate sector, cement sector, these are opportunities where investors should use any dips to buy into. Like even at the current levels, if one were to be a little aggressive, keeping a time frame of 12 to 18 months could give a decent risk reward. Because see, one most important thing, Suresh, is that domestic liquidity continues to be strong. The FIIs are also getting a lot of capital now back to the Indian markets. And most importantly, the interest rates are going to be a key trigger. I think the month of January is going to be also important, that the market is expecting some news on the electoral front. And that, if it happens probably by the last week of this month, could possibly further re-rate the market. So I think, you're going to see a lot of news flows coming in the month of January. And I think that would keep the markets, obviously very pretty glued. And of course, the earning season would be in full flow, from the second week of January. So I would believe that it's a buy on decline market. There's a lot of money to be made, but I think investors need to be patient and should not hurry and buy stocks at any price, because now you've got to be extremely selective. You can't buy anything and everything to make money in the market.
Right, and FIIs are back from the seasonal holidays. Yesterday, they bought equities worth somewhere around 1,500 crores or so. Good news for banks?
Yeah, definitely. We continue to be positive, Suresh, on the public sector as well as the private sector banks. In fact, despite the fact that banks have not done, really well on the markets, our sense is that Q3 numbers, from large banks like SBI, Bank of Baroda, Canara Bank will be very strong. In fact, the credit growth, the asset quality, and the kind of business updates, which have come from a lot of smaller banks like Ujjivan Small Finance Bank, Equitas, typically even NBFCs like Poonawalla Finance, Bajaj Finance. I'm quite pretty sure that not only the PSU and the private sector banks, but even the financial services player, NBFCs players should do well. So I think
Hmm.
investors should use this underperformance to add some positions here. My sense is over the next 12 months, if we have a strong GDP growth and a very strong corporate capex going forward, the banks are definitely going to be in action. But yes, you'll need to give in a slightly longer time frame to ensure that you get a decent price risk reward.
Good morning, Mr. Gorakshakar. I'd like to drive you you spoke about FIIs. If we look at calendar year 2023, two sectors stand out in terms of FII inflows. One is auto, which drew 28,746 crores of FII investments inflows, and capital goods sector, which drew 41,260 crores of rupees worth of FIIs. If I look at the capital goods sector stocks, most of them have given big returns to the investors over the last 1 year. HAL 137% over, Suzlon 280%, Bharat Forge 43%, BHEL 138%, even Siemens 41.58%. What do you make of this sector? How should the investors approach this sector now? Is it on a peak, or is it something a sector that investors can still look in to make book profits in the near term?
So I think my guess is that capital goods sector will still continue to be positive, and I think broadly, despite the fact that stock prices have jumped significantly, these you've got to have a selective approach. Like we have been very positive on Larsen and Toubro. We believe that the company has a 18 to 24-month kind of revenue visibility. Order book has become extremely strong. Most importantly, I think markets have understood that after almost a 10-year kind of underperformance in the capital goods sector, the sector has now taken off in a big way. Corporate capex is in a very strong kind of position. The government is also focusing on a lot of infrastructure projects, and this is going to continue in the coming year. Possibly once the new government is in place, we'll see a budget which is going to focus largely on infra, domestic manufacturing. So all this points out that players like Larsen and Toubro, Cummins also, which is into the energy equipment space, because there's been a lot of news on the hydrogen side. My sense is that once elections are over, a proper hydrogen policy will be rolled out, and that would benefit players like even Cummins. Most importantly, players like BHEL, players like Siemens India. I would believe that here prices have gone up, but definitely any opportunity on a decline, if the market's correct or if there is some profit booking, I think would be a good opportunity to accumulate here. So I think broadly we continue to be positive here, and we don't feel that one should book out, profits, very early, because the earnings traction for FY25 and 26 looks pretty promising.
All right, and Avinash, Dabur in its Q3 business update said it expects recovery of consumption in both urban and rural markets in India, and that is something that we, consumption pretty much was lagging. Do you think, and does it make you hopeful about the prospects of the FMCG sector over the coming quarters? And second question would be, what looks attractive in this space?
I think Suyash, FMCG has been a segment which has underperformed largely because of the demand compression in the rural markets. I think if Dabur has given a encouraging business update, it definitely is good news. But I think I would look at the volume growth number in particular, when the Q3 numbers are presented, because even as of now, as we speak, rural demand continues to be weak. In fact, our sense is that quarter 3 may not be very encouraging for most of the FMCG companies unless and until rural demand picks up in a big way. At least as far as products like two-wheelers are concerned, FMCG products are concerned. So I would believe that it's better to wait for some time. But yes, I think within the FMCG pack, companies like Godrej Consumer Products, maybe a Dabur or even a Marico can definitely be looked upon. These are definitely available at decent valuations, but I think the key trigger would be the volume growth, and that obviously would come out once the Q3 numbers are declared and we get to know the management commentaries.
All right, and Grasim Industries, now they have approved raising about 4,000 crores via rights issue. The price set for the issue is 1812. The issue will again open on January 17th till January 29. Should one subscribe to this issue, because the stock has given decent returns in the last 6 months, but in the textile segment it has been a relative underperformer?
No, I think my guess is that, see, Grasim is now got to be looked upon as a holding company, Suyash. Its textile business continues to do well, but I think if you look at the structure of Grasim, it is now the holding company for the Vodafone entity, even for Ultratech, and obviously the new paint business. I think they require
Right.
a decent amount of capex to be made here. So I think from a longer term perspective, I think holding companies are normally valued on their book value basis. So I think somebody who wants to take a 2-year plus view can definitely subscribe here. But in the very near term, I don't expect any major fireworks here, because frankly, it is a holding company. And I think it's better to focus on individual businesses related companies rather than holding companies. So I think the rights issue will go through, but only over the next, say, couple of years, one could expect decent returns from a stock like Grasim.
All right, that's a view coming in from Mr. Avinash. Gorakshakar sir, always a pleasure speaking to you. Appreciate your thoughts and thank you for joining us here on News 9.